Two seasoned financial sector professionals came together to build a company to cater to people who are not served by the mainstream financial institutions. We are talking about iFinance, which was started with the aim of making funds available to the unorganized sector, which is usually hamstrung by limited funding options.
Before we started in April 2014, Vikram and I both have worked in a number of banks, some development institutions, even in finance companies, and we worked earlier together. And both of us had this vision that we wanted to do something in a space which was underserved, where the banks had not yet reached. And that's how we came together on this enterprise of providing loans to finance to micro enterprises and small industries. One of the reasons why no one has tried getting into this segment is that it's a difficult segment to look at when you look at classical ways of giving finance. So you have to look at unusual ways or different ways of, or innovative ways of providing finance to these people.
iFinance's business is based on three basic foundations, that is credit, technology and data analytics. They understand that while their customers have good cash flows, they usually do not maintain any record of such flows. They are trying to address this issue through their various products.
So what we do is basically we look at, so we figured out that these customers have good cash flows but they don't have a good record keeping. So some of the products which we have done is which actually matches to their cash flow. So we have term loans, we have products which actually matches the term loan, say for a manufacturer or a trader or a service provider, or it could be for agri product or could be a simple job contractor. I think that's what we do as of now, and going forward we also are now getting into multiple products which will actually help them more. Products like a discounting product or an asset financing product, or which is kind of something which your customer asks for, and that's what we plan to deliver to them.
When you look at credit, we look at multiple ways of assessing the income of the customer, and multiple methods to look at how the cash flow is. When you look at technology, the technology is focused on providing low-cost delivery, but simple things so that customers can understand it, our employees can understand the technology, but using a lot of latest technology for Android-based technology and cloud-based technology to ease up work and make it low cost. On the analytics side, we do a fair amount of analysis. A lot of data is picked up and analyzed to get insights into how a typical cluster or a typical industry type operates. What are the dynamics of the industry, what are the margins, what are the inventory turnovers, etc. And that is used in a very intelligent way to look at how to get good customers from that cluster.
So this year we plan to actually go to 80 odd branches, close to 80 odd branches. We currently have a customer base of 15,000. We plan to take it close to 50,000 customers. We want to be an all India company. So we will have a presence in North, Central and South India to start with, and then move to the other parts of the country. And we want to actually have a diversified product range, which includes not just the cash flow products, but also products like your discounting products, your asset products and all.
There's a lot of hype about robotics in the world for a very long time now. As I was sitting one day and thinking, why not make robotics more accessible?
Having worked in the e-commerce space for more than a decade, two friends, Amit Sharma and Apurva Joyce, noticed that digital commerce contributes 1.4% to the Indian economy.